right, Carter, the red light's on. We are now recording, so let's do a quick sound check before we get into it. What did you have for breakfast this morning?
Eggs with some buckwheat and arugula. Rather strange breakfast.
Yeah, it is a strange breakfast. The buckwheat, huh? Was that what are you doing with that? Just
I actually, there's a restaurant here. I took our kids out because they're going to be snowed in from school today. So
nice.
I wanted to go eat a good meal before they were stuck in the house all day long.
Right, cool, awesome. Yeah, get that energy so they're all ready to go all day. So
exactly.
Awesome. Well, I think we're sounding good here. So let's jump right into it. So why don't you tell my listeners a little bit about who you are and what you do when it comes to crowdfunding? I think we've got an interesting conversation coming up here. So why don't you tell my listeners what you do?
Sure. Yeah. I'll start backwards with what we do, then who I am, or who we are, more importantly. So the idea of Acretrader.com is crowdfunding for agricultural farmland, or for agricultural real estate. So we actually take each individual farm, place it in a unique LLC, then sell shares of that LLC on our platform, Acretrader.com. Why are we doing that? Farmland historically is one of the most attractive asset classes out there. Not only does it put up a great annualized return, well, it's great because you get rent from the farmer every year. So typically the farmer pays you rent in March or April before he puts a crop in the ground. So you get one check a year. Default risk is as near zero as it can be, we think. And then you also make money from the appreciation of the land. So beyond your annual rent check, every year, historically, the value of land has more or less gone up over time. If you average two of those together, since the index was created in 1990, the annualized returns are about 12%.
Wow.
Importantly, that's without leverage, right? So, it is a relatively, because there's no leverage or debt on the land, the volatility is just dramatically lower than a lot of other asset classes out there. Sure. And especially any asset class that offers that type of return, you just don't see the levels of volatility. So that's why we think farmland is such an attractive asset class, is it's historically been a relative safe haven. It's non-correlated to the S&P, sort of outside of the mainstream financial system. However, the issue is if you want to acquire farmland, you got to go out, start with, $500,000, $1 million, go to a county you've probably never heard of, speak to a broker you've never met, and get in the business of farming. That is an absolute non-starter for just about anyone that I know.
Yeah,
and probably you as well.
That doesn't sound like my week. I'm not going to do that this week. That's not.
Yeah, exactly. Not a chance, right?
Right.
And so our idea with the platform is to create a really simple mechanism for investors to go on there. Right now, it's accredited investors. We do anticipate later this year opening up to non-accredited investors as well.
And and for like my audience out there, what's the difference between those two things? We don't usually talk about it a lot here because we're a lot in reward based. But what's the difference between accredited and accredited investors?
Sure, there are about 12 million people in the U.S. that are accredited investors, and that means that as a single person you make $200,000 a year, as a married family you make $300,000 a year, or you have a net worth of $1 million outside of your primary residence. So it does slice the population into those and the SEC's thinking behind that is, whether flawed or not, is those people they have a little extra capital to lose if they get into riskier investments. Sure. So most of the world of crowdfunding outside of Kickstarter and Seed Invest and a few others, when you're buying actual interests in businesses as opposed to just buying the promise of future goods, they do require that accreditation with some caveats, basically making the platform more approachable to non-accredited investors, which is our intention in the coming months to open that up to everyone.
Sure. That's cool. So where did this start? How did you put together a platform for this? How did you get into this? It seems like a pretty niche, niche business model that you're working on here. So how did this all come to fruition?
Yeah, so I'm personally a finance geek. My dad is a farmer, so it's a nice intersection of the two. And maybe 18 months ago, 2 years ago, I don't know, my dad came to me and said, "Hey, I'm going to buy some Bitcoin." I was like, "You idiot! It's $600 for air. Why would you do that?"
Right.
Talked about it. Of course, it promptly went to like 18,000. Horrible investment. Yeah. But in that conversation, he said, "You're right. There's no asset behind this. If we could create some sort of a coin, backed by a tangible asset like farmland." And of course, he's a farmer. I grew up around farmland myself. Was born in a farming community, and he's a multi-generational farmer. So I've bought and sold land with him over the years. And so got to thinking on the idea and, maybe a year later, put a concrete business plan down and decided to chase after it. So Very, very excited about what we've built in a fairly short amount of time. Tomorrow is our actual official launch date.
Oh,
So
nice.
we take the platform live. So yeah, we're very excited to get it out there in the world. We've already closed our first transaction, and I think we'll quickly begin to fill the next ones on the site.
That's great. So what did it take then to jump into like starting a platform like this? I mean, again, most people are like, I have a product I want to launch. They don't build platforms for it. So what was
Right.
kind of your steps behind that?
Yeah, look, it took a big personal commitment for me in terms of capital and time and ultimately opportunity cost to move into this job. And then since then, we are in the process of raising a round of capital for the business to fund the business itself.
Mm-hmm.
And so we're a team of about 10 right now. But a lot of time, right? The short answer is a lot of time and a good amount of money committed to it to build the actual platform itself.
Right.
And for us in dealing with the transaction sizes we're dealing with, obviously the platform has to be perfect.
Mm-hmm.
We can't take anything less than perfect live. The analogy, a great analogy is the FAA, that regulates air travel in the U.S. If they have a 99.99% uptime rate, then people die.
Right.
And with us, it's the same. Like, we have no margin for error. If we screw up and we lose somebody's money in a transaction, or expose the platform or do anything wrong, it's over.
Sure.
And so we've been very methodical and cautious as we've built the platform to make sure to take all those things into account.
Yeah, that's great. So, so for you guys, where do you see this thing kind of going? I mean, do you see equity crowdfunding in the space you're playing in as being something that's around for a long time? Do you see it as being a little too niche right now? What's kind of the temperature around your conversations internally around the platform and stuff? Well, not even your platform, just equity crowdfunding in general is what I should say.
Totally. So, there's a lot to unwrap there, right? Equity crowdfunding as a whole, the idea of crowdfunding in the securities world, the finance world, securitization,
Mm-hmm.
right? The concept of taking something, typically a business, and breaking it into small pieces and selling it is the core of securitization. And the Jobs Act 2012 obviously allowed us to really open up that field and allow other people to come in and play. I do worry. There's a lot of speculation that goes on in the world of crowdfunding, and we do have our concerns. We see some less than exciting deals going on out there, and there's a frenzy on both sides of the marketplace to bring deals to market on the supply side, and there's a lot of people anxious to invest on the demand side, and so that's part of our shtick, if you will. Part of our approach is to try to bring a less exciting, like we're dealing with land, right?
Mm-hmm.
It is an absolutely boring asset, but we think it's a really great one, and that's exciting to us. Is that the old adage is you make money a teaspoon at a time, you lose it a dump truck at a time, right? And we're just trying to stay away from dump trucks, and there's a lot of out there in the world of equity crowdfunding. There's some really cool deals, some really cool companies raising money, some really good in the real estate platforms out there as well. Some really great and attractive investment opportunities, but with that comes some caveats and some warnings, and just always be careful and do your research before putting money into something.
Right. Now, are you guys going to be focused in on, was it like Reg A plus, or are you guys doing Reg D? What is there a focus around what you guys are doing right now?
Yeah, right now we're using Reg D,
Mm-hmm.
And that's why the accreditation wrap is around us, and we think that's a good one for investors to protect them as we scale it out. We do intend on pursuing Reg A plus. And inside of Reg A plus, there's tier 1 and tier 2 offerings.
Right.
The tier 2 offerings to us are pretty attractive. There's real regulatory and legal legwork we have to do before bringing those offerings live. But ultimately, that's good. It's for the protection of the investor, right? And we're all about that. So, pending us working through some of those documentation issues, our idea is is one of our first products to bring to market for non-accredited investors to have an e-REIT, right, where you can come on and just invest $1,000 a month, if you will, or $5,000 or $10,000 here or there, and get access to the asset class of farmland, and do so in a diversified way inside of a larger REIT holding a real estate investment trust is what REIT stands for, as I'm sure you know. But that's basically a fund of which in our case would have several different pieces of farmland in it.
Gotcha. Interesting. Now, was there any consideration as you're kind of putting this thought together of just of just finding potential offerings and just using through other platforms? Or is this niche enough that it really needed its own platform? So I'll give you an example. I worked on like a medical one on over on WeFunder. And on the surface, it seemed like this should be an absolute no-brainer until you realize that equity crowdfunding in medical, whole nother animal than just a brewery or whatever it might be, right? Like a no-brainer where it's like, oh, I might not get my money back for 30 years. You know, who knows how long this thing could take.
Right.
Was there any sort of scenarios along those lines when it comes to like, land equity where you know, instead of just going to like a WeFunder, an established platform, and was there anything like that you guys were talking about? Yeah.
Sure, the considerations were made to use out of the box software, to go do it through other platforms, but ultimately we decided we wanted to build our own. We want to, you know, control the product to make sure that it's as professional as possible, as well selected as possible. And we're dealing with a multi-trillion-dollar asset class, right? There's 900 million acres of farmland in the United States. It is unfathomably large,
right?
And that asset has not really been democratized in the way that so many others have. And you know, crowdfunding for businesses is very, very different than what we are attempting to do, right? Or what we are doing, rather. What we are doing is you know, selling each LLC owns title, right? You own physical, the LLC owns physical dirt, and so we're not making bets on businesses,
right?
And that's the appeal to us, is you're owning a commodity, land, where in the U.S. and you know, the supply and demand is forever in your favor. The population is growing. The amount of land we have is shrinking. That's, you know, really, really simple economic terms to explain that the value of this has gone up over time, over just about any time period you look at historically. And our thesis is that will continue.
Right.
We need more food. We got more mouths to feed. We're eating more beef, you know, chicken, pork, etc. And those things take more and more input. And you know, those inputs, it's soybeans, it's corn, it's grain. We grow it on farms. So we're, it's a very different asset. And we decided ultimately we need a specific platform for this asset. And it's so big,
sure,
both the supply and the demand side of our marketplace, that it justified building its own platform.
Sure. Yeah, it makes sense. Now, do you envision that that when this thing is fully matured and you guys are out doing everything you're doing, do you envision that the investors are that's what they mostly invest in, is land, farm, that sort of stuff? Or do you envision a guy like me, right? Like, I don't know, maybe I'm accredited at some point and I go, you know what, I'll swing the bat here. Where do you guys kind of envision your investor kind of persona coming from down the road?
The persona, you know, we had our own assumptions, right, as we started it up and started ramping it up, and we haven't been able to identify at all what that is yet, because the demand, the investor demand, has come from so many places, right? The farmland is a fairly straightforward asset class, and there's, you know, you can have great dirt or good dirt, but it's pretty boring and straight up, right? And again, that's what we love, is it's not something that the value should go to zero tomorrow, right? But the investor profiles, they've been all over the board. And so again, we intend to open it up to, and our hope is we can do it sooner rather than later, open up to all investors to bring those on. But yeah, it's millennials, it's old people, it's men, women, you know, varying backgrounds. You know, there are a good amount of doctors and lawyers and dentists and investment professionals and people in investment banking that live in big cities, and that's sort of what we thought would be a lot of our core crowd. But we found a lot of farmers, right? A lot of people that already own a ton of farmland coming on, going, wow, this is cool. I own farmland in Mississippi, but I can own some in Illinois, right? The farmers, they already understand. Right. If you inherit farmland from your dad or granddad or grandmother or whoever, you're already sitting on a massive amount of value. So they understand the appreciation potential of farmland. So we're seeing a lot of demand from those types as well. So
interesting.
A really long answer to say, we don't know, but we've been fascinated at the breadth of investors coming on the platform.
Well, I asked that because that's for my own inquisitiveness, because, you know, I work a lot with WeFunder. I'm one of their preferred partners for marketing, and that we really are trying to identify who this person is. And it's not beautifully laid out with Facebook ads, right? In terms of interest groups or whoever we're targeting. It's, you know, it goes all over the place. It's, you know, we're trying to find the things that what are the cross sectors? If they think about this, do they also have the Robinhood app or something like that? Is there, what are these like, what's the goalposts here that we're playing in? And it seems like it's just all over the place, which makes it quite challenging as a marketing guy, right? Trying to dive in and be like, all right, if they like this, they'll like this. Marketing to a 65-year-old guy who likes farm and a millennial there might not be much crossover.
You have you've nailed it. I'm sure our marketing guys will see this, but it's the frustration of their day. We've got a couple of professional marketers, online marketers. This is all they do, and they're extremely specific, sort of data scientists in their approach. And yeah, it's frustrating for them, right? Because they're just like, we keep chasing these personas, and then out of left field, this idea of a person shows up we never thought would be an investor, and they cost $50,000 into a farm. It's just it's all over the place.
That's funny. Now, is there a certain like types of farms that you're going after, or how does like a farmer get involved? I don't know. My parents have some farmland out in the middle of Michigan here. Like, could they be a part of this? How does that happen?
Yeah, great. Tell them to call us. So yeah, right now we're focused on row crops.
Okay.
So that's the difference being there's row crops, there's permanent crops, there's orchards. Permanent crops things like almond trees or pistachios. They offer more income, but with higher risk. You get a drought, or you get a bad freeze. Those types of things can have pretty material impacts on what you're doing. Or orchard farms where it may take a pecan tree 10 or 15 years to be productive.
Right.
And so right now we're focused on the really simple commodity row crops, which there's upwards of 300 million acres of in the U.S. So again, a really big market. But yeah, that's corn, soybeans, wheat, rice, sorghum, those types of products. And you asked a great question of how do we work with the farmers. It's something we're really excited about. Is we bring a lot of value to the farmers that we work with in a couple of primary capacities, and we have some content on the site to help them understand this. But one, and most importantly, and most obviously, is we're a source of capital. Mm-hmm. And there's farmers and there's farm owners, and sometimes they're the same, sometimes they're not, right? They're 40% of U.S. farmland, almost 40%, is absentee owned, meaning it's dad or grandma or brother and sister, whoever that owns it, that's not actually out there planting and reaping harvest, or selling crops and things like that. So they get cash rent. It's a very similar situation to how we work with farmers. But in terms of farmers and farm owners, to both the answers the most immediate answers, we offer access to capital. So if you were a farmer, I'll give you a live example. We have a farmer in Northern Illinois. He's already a well-established farmer. He's young, progressive, doing some really cool things to improve soil health. And he has a relatively large farm that he works on. His neighbor is about to sell a portion of his farm. This guy says, hey, I want to go farm on that land. I've only got access to $1 million of capital from the bank. The deal is bigger than that. Can you bring on investors to help me out? And it's a win-win for him because he gets access to this land that may otherwise be sold to someone else where he couldn't lease this neighboring land and get economies of scale. And so, to our investors, they get an attractive rent. He's like, hey, I'm happy to pay an attractive rent to you guys because for me, I'm literally next door, running up and down the rows, farming this land. So it's easier for me to come over there and work on this ground too.
That's interesting. Wow. That's fascinating. So let's flip over a little bit to just like the entrepreneur side of you. So like, was this something that you always had this vision of taking your love of finance into sort of starting your own business, running your own platform? Is this something that you've always kind of had in the back of your mind?
Yeah, I'm sure many Americans, if not most, do. Right. That's the American dream, is to go build a successful business and ultimately employment and taking care of your family that way. Right. And so yes, it was always an itch in the back of my head. So the quick backstory about me, and I'll get back to the more interesting thing, which is the business. So I came to school here at the University of Arkansas, where I currently live, in 1999. Got a useless degree in physics, then went on to, after school, I was pursuing music professionally and played in a band and toured for a few years. And while I did that, we had a business we really enjoyed. And it really helped to spark that entrepreneurial pursuit for me. And I grew up in an entrepreneurial household. My parents were both entrepreneurs. So After that, though, I had a really great opportunity to go be a research analyst at an investment bank called Stevens. It's a middle market bank, maybe 1,000 employees. And so I wrote equity research for them, which means more or less I was a consultant for mutual funds and hedge funds and investors that invest your 401k and your IRA, things like that, right? So, so my area of specialty was digital marketing, data and analytics, and mortgage processing. It sort of dovetails nicely into the current business we're working on. So I did that for 7 years, and then had a great opportunity to join some friends on the West Coast. They were starting up a long-short equity hedge fund. So joined those guys, and really awesome team of people out in San Francisco. So I spent the last 5+ years in working with those guys. And then just recently, as of December, basically, I'm now a full-time employee of Acretrader. So I went to pursue this full-time, and
Nice.
really, really excited to ramp up the business.
Nice. And what did you, like, what was some of your mindset around building your team and stuff? I think that's challenging for a lot of people running any sort of startup right now and doing crowdfunding. How did you put the team around you? What were you looking for? What assets and stuff were you looking for from team members?
Sure. So, first and foremost, this is going to be aired, I'll use a kinder word. There's the no jerks rule, which is just, you have to work with good people. And I've been really fortunate in my career to work in some great companies that always adhered closely to that rule. And we're doing the same. Strictly only allow great people in the office. So that's first. And then what we really look for is curiosity, intellect, and hard work, right? We have so much work to do that it's an intense work environment, and so we've got to make sure people are willing to come in early and work late, and really put in the hours to build what we need to build. And the curiosity for me has always been something that's really important. In the interview process, I want to understand what books people have read, what's something they've dug into recently and been interested in. They spent time studying that was not not related to their work. And ultimately, the reasoning behind that, in my mind, maybe it's probably flawed, but the idea being that if someone has interest and they go dig and they go find answers, they're going to be great problem solvers in the office.
Right.
And that's the kind of people we need. Identifying a problem is not good. Right. Identifying a problem and presenting solutions and/or actually finding and executing on the solution is ideal.
Right.
And to me, it's important that someone is curious enough to go dig and go explore and create solutions.
Sure. What's keeping you up at night right now?
It's a long list, so I'm just trying to think of how to prioritize it. One is I built the business personally, and now we're looking at taking on some external capital to fund the company. That's a new level of stress, and knowing that you can make a bad bet yourself, and lose your own money is stressful enough. But then when you start thinking about doing it for other people especially in our case, where it's our advisors and our investors are friends, they're great people, they're successful business people, and the potential of losing their money is absolutely terrifying. And so I think that's probably the top of the list, is just making sure that we bust as hard as we can, we execute against the plan to prove this out for our investors. And that's both in the business and now also the investors in farmland, right?
Sure.
The supply side, making sure we identify top quality farms at a great value that we feel comfortable our investors, our website users are going to be able to reap the long-term rewards of. That's also extremely important.
That's cool. So you mentioned that the public launch is this week, you said, right?
That's right. Tomorrow, Tuesday.
Tomorrow. Okay. What does that entail? What does that mean? How do you guys internally talk about a public launch? Is there, you guys like on product hunt? Is there anything that's coming with it? What are you guys doing to launch?
I think mostly it's an internal rule that just says there's no going back once we're here, right? So as we've been in build mode and integrating new payment processing and new technology on the back end, we've the last month or so the site has been working perfectly fine, but we always had this excuse of, well, we'll go back and make this a little better and we can fix it later, and we set this deadline for ourselves to say, all right, after this deadline, right, all systems go no matter what, and so and then also it does mean that we'll start to put more resources into marketing. Right now, marketing has been a test and learn, and as you were familiar with, and whether it's Facebook, Google, Bing, affiliate marketing, all those various avenues, you've got to spend some time opening and closing the dials and turning the knobs just slightly to see what works and what doesn't. And so we've been doing a lot of that test and learn. And after tomorrow, it's time to open up the spigot and go ahead and push some real dollars out there to drive some traffic to the platform.
That's cool. Now you mentioned marketing a little bit. What are some of the handcuffs that you have because of being a platform and SEC regulations? What are some of the things that you have to kind of work around? Because I think that's important. A lot of my conversations, people don't know that that's actually even a thing, right? That they're just yeah. So
it's a big thing.
It's like no. There's only certain things we can and can't say, and I got to walk them through that. But for our listeners, like what are some of the things that you have to kind of be cautious of when you're going out to market?
Yeah, I think some of those things are just, one, be careful, right? Qualify things and make sure you explain very clearly upfront at every opportunity possible. There is the risk of loss of capital. Mm-hmm. There is, history is not always necessarily indicative of what the future is going to be, right? The returns have looked great over many periods of time, but if you buy today and sell in 1 year, there is a real, or 3 years or 20 years, like there's still a risk. Mm-hmm. And so, for us, it's something that we spend an inordinate amount of time and focus on is communication and making sure that we, at every step along the way, say very loudly and clearly, hey, look, all this looks great, but let's just, everybody just do your homework, read and be careful, right? And so we radical transparency is a cultural mission of ours. I'd say two things we care about most, and one is being business tomorrow. And so every day we come to work, we everything we do is to make sure that we're in business tomorrow. And two is radical transparency, and make sure that we show people internally and externally anything they could want to see. And so it's a long-winded way to say, like, both staying in business and transparency require that we show people anything and everything that we're thinking of, and the numbers and how it all works. And then in those communications, again, under promise, over deliver is a good way to be. So on the site, for example, we show people, hey, look, here is the current yield on farmland, whether it's 3% or 4% or whatever the number is, just the cash component is relatively low because commodity prices are depressed. We're in the middle of trade wars. There's been other, we had really great weather for several years in a row, so we've had bumper crops. So commodity prices are depressed. We just assume that those prices stay low. I think it's fairly safe to say, if you looked at history, commodity prices go up over time and sometimes do so in a pretty aggressive manner. But if we just assume they stay low, we don't overpromise on that side, and we don't overpromise on the land appreciation side, then we pencil out, hey, look, we are expecting annualized returns in the high single digits. Those could be negative. Those could be a lot higher. Historically, they've been 12. So our hope and intention is that we always underpromise and overdeliver, and especially if we acquire high value land at a cheap valuation, then we really should be able to overdeliver. But again, a long-winded way to say, be extremely cautious, right? Be very, very forward in every communication, and make sure to underpromise at every step.
That's cool. Yeah. How does, for your business model, how does climate change affect your overall pitch decks, conversations? How does that play into it at all? Or does it play into it?
Yeah, totally. So it does affect farmland, right? In fact, as you move north, right, there's more stuff. Like in your area, for example, you can grow crops the season's a little bit longer. That affords you some additional opportunities. Unfortunately or fortunately, I don't know how to say it, but right. But there are some winners and there are some losers, as there are in most industries, from climate change. And so part of that is it opens up more farmland as you go up. Part of it is it's can be bad for farmland in really hot climates, or importantly, this may be most importantly, rainfall, right? In places where rainfall or water rights or water access are an issue, that can create some very material problems. Water is something we haven't talked about, but something we think about every day. Something we have to be hyper careful of as farmers is to make sure to only acquire farms where we know there's water, we know there's going to be water for a long time. Right. So an example of an affected region would be northern Texas, Oklahoma, Kansas, and some of even Nebraska and South Dakota are on what's called the Ogallala Aquifer. And this is more human use than it is climate change, but the two ultimately influence and play together. That aquifer is being depleted at a rate that is far more rapid than the replenishment cycle from rain every year. And so buying farmland on top of that aquifer is a non-starter for us. In most cases, South Dakota, there's actually places where it's great, but especially think about the panhandle of Texas. There's some really great farms out there, and they may even be at a really good price. In 10 years, they may not be farms at all.
Right,
they may be farming dust. So and I don't mean to be exaggerative. Maybe it takes a lot longer than that, but in 10 years, you can see, oh man, we made the well another 100 feet deeper, and the water's trickling out here. Right. This is dangerous. So.
Interesting. That's interesting. Now, are you anticipating at some point? Are you actually? I should ask. Are you just U.S. only right now for farms and stuff?
We are U.S. only right now.
And do you envision at some point adding in a Canada or Mexico or something along those lines, or is that bigger? I don't know. I'm sure the legal side has to be a big issue in that sort of world, right?
Sure, it already is, right? It's a total quagmire. Both farming laws, corporate laws, securities laws, real estate laws, the things we deal with. But that's just part of doing business. That's okay. And look, the more complex it is for us to execute, the harder it is for the next guy to copy our business plan. And to give you a peek on the inside of what we do, it is really, really hard. But that's our business, right? The whole idea for us is take something that's highly complex and make it a few clicks of a button for the user, and they can invest, right? You think our business is hard, think about what Amazon does every day. But I'm sorry, I'm off topic. We do hope to open up to other countries in the future. We want to make sure those countries have extremely clear and owner-friendly title laws. So stepping into, there's some really, really great farmland in Africa, for example, some really cool opportunities to make huge returns. Also super dangerous, right? Venezuela, I'm sure you can buy some farmland really cheap there, but the government can come take it from you at a moment's notice. So we have to be cautious of those things. And there's such an enormous opportunity in the U.S. We're some of the best farming land in the entire world is here, and there's hundreds of millions of acres of it. So we got a really big opportunity in front of us.
Right. How about on the investor side? Can they invest? Do they have to be just U.S. only, or can they be anywhere in the world?
Right now, U.S. only.
Okay. Gotcha.
So
very cool.
we can and hope to have solutions for some countries internationally to invest in the future, but currently we're focused on the U.S. market.
What are some of the hangups behind the scenes on the platform side as to why it has to be U.S. only, or European people can invest? What's some of the hangups behind that?
Yeah, one, the laws here are just clear, mostly clear and cut and dry, and so we're a lot less likely to run afoul of regulations and laws in the country we're native to. And so I think that's first. Going back to that be a business tomorrow, the day we go try to do something in France or take some money from Saudi and Spain, and the government comes along and says no, we could be in really big trouble and risk our business for that. So I think that's something that we're just hyper cautious of as we continue to build out our legal team, and we find that some of those places are highly approachable. Then we'll explore further. But for now, it's stick to your knitting and do what you know best. Right.
So walk me through what you guys envision, maybe even like the next 6 to 9 months look like. What are some of the hurdles you see happening? What are some of the opportunities that you see coming down the pipeline? Where do you guys see the next 9 months to a year, whatever it might be, look like?
Sure. The most obvious is on any two-sided marketplace, it's a seesaw. Right. On one side, we've got the supply of farmland. On the other side, we've got the demand from the investors. Making sure that we're always well in front of an imbalance is really important. And so right now we're running around like madmen, madwomen, identifying farmland. We're seeing an unbelievable amount of parcels and ideas, but we've got to really work hard to dig into those, make sure that we only acquire good or the best land we see. Likewise, on the demand side, we've got to make sure to scale appropriately and to make sure that we have the resources on staff to speak to those investors and get them ramped up on the product, both the value proposition, crowdfunding, and how that works, and our asset, which is farmland. Most people everybody knows farmland from when you're a tiny child, right? Right. First noise both my kids made was a moo. What sound does the cow make? So, it's. But still, there's a lot of education involved on both sides. So I think that's a big part of what we're doing the next 6 to 9 months. Beyond that is also just continuing to build out the platform, add feature functionality, and add new products. So add new types of farmland, the REIT. We're working on a secondary marketplace for trading. And so getting all those things set up are going to be what consumes a lot of my time anyways, is thinking about product and evolving the product.
Sure. And how about, like, let's go out even farther. What's on the whiteboard for 5 years from now or something like that? I mean, where do you see, and just in general, where do you see equity crowdfunding in 5 years? I mean, I talked to very few people on the inside of this stuff. So, like, but where do you see it going? Do you see it becoming the equivalent of a Kickstarter at some point, or do you still see it, being still niche? Like, where do you see 5 years from now for this space?
Sure. We think the market is large enough. We could be bigger than any of the companies out there. And mind you, all the companies out there should be bigger as well, right? But for us, the idea in 5 years, to be cavalier and aggressive in the statement, is to democratize the farmland buying and selling process. Right? Again, it's a multi-trillion-dollar asset class. It is absolutely enormous, and it's a sector of the economy that has not advanced well. So we think if we can be a part of digitization of that sector, it's a win-win for both sides of the marketplace, for the supply side, the farmland, as well as for the investors. So that's the big picture for us. That's something we're really excited about. And if we execute properly and we grow responsibly and don't try to get out over our skis, we think we can build something incredibly large here.
That's awesome. Well, where can people learn more? How do they dive into your world? Where do they go? Where do you want them to go?
Acretrader.com. Acre, A-C-R-E, Trader, T-R-A-D-E-R, Acretrader.com. We have tons of educational material on there. We've got a knowledge center and a blog that we actively write on and continue to post on. But there's some really great overviews there, like the For Investors section of our website shows you the historical performance and how it works. And then there's a deep dive how it works page where you can understand the various mechanisms behind the scene of how we actually execute each of these transactions and make it so that it's rock solid, bound and tight for the investor, that they've got the proper protections in place.
That's cool. Well, Carter, I appreciate you taking time out of your day, man. This was a great conversation. Thank you. Unbelievable platform that's coming. I'm very excited to keep my eye on what you're working on down there. So
thanks, Jeff.
This seems like a very, 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 very unique business model. It's awesome. So again, everybody go check it out. If you have any questions, obviously I'm assuming reach out, send a message to the website. And I wish you guys a lot of luck and have a great launch day tomorrow.
Thanks, Jeff.
And go hit a home run, man. I appreciate it. Thanks so much.
We appreciate your time. We'll talk soon.
All right. Thanks.
Bye-bye.